G'day guys, it is Rhys from VEMA Trader, and in today's video I'm going to be talking to you guys about descending triangles. Now descending triangles are typically a bearish pattern. In this video I'm going to explain why that is the case, and then I'm going to show you guys how to trade them with VEMA Trader. Righto, so I am a big believer in knowledge should be built from the ground up. So rather than just seeing a descending triangle as two lines on a chart, it's important to understand what those two lines actually represent. Now, what they're showing you, let's take a look at Bravo first. So right now, Bravo is representing our horizontal, the bottom of the descending triangle. What that's actually showing us is this is where buyers are outweighing sellers. Every time price gets down here, there is enough buying pressure that selling pressure reduces and price manages to recover, right? It bounces back up from there. Buyers overcome sellers and price heads up from these levels. It shows that right here, buyers are very happy to buy. There's strong buying pressure happening at that is currently about, I think, 18,200. Alpha, on the other hand, is kind of telling us the opposite. So if we take a look at price the first time we got to alpha, that was about, let's say, 24,700. Price got up there, and then sellers overcame the buyers. That is why price rejected, sellers showed strength, buyers dropped off. At the end of the day, no one was happy to buy above, let's say, 25,229. Because if they were happy to buy up here, price would have made it there. That was the price where there was more selling pressure than buying pressure, and price was rejected and pushed back down. Now that's all well and good, but where the descending triangle actually starts to form is on this second touch. I mean, it's not even a touch, right? You need that second point to set the line for your descending triangle. What this represents is when price did get back down to 18,200 and buyers again overcame sellers, the buying pressure was reduced. It may have been still just as strong at 18,200, but when in price was pushing back away from 18,000, it did not manage to get as far. You can see it topped off here instead of there. And if we go for the fibs, I reckon that'll be about 50%, a little bit more. So we got to the 61.8. So essentially what we're seeing is there was a 40% decrease in how far buyers would manage to push price, because they managed to push price up to here and lost all of that ground that they had gained previously. So it's really showing that sellers are increasing, right? Sellers are selling for a lower price. People just want to get out of the market. They either bought here and want to take profit, they're cutting their losses, whatever the case may be. Here, people were happy to hold for a little bit longer as price came up and sell at a higher price. When it came back to here, a couple of weeks later, people just took their profits earlier. They cut their losses earlier. They were selling for a lower price. And that's the opposite of what you want to do. You want to sell high. So it shows that selling pressure is really coming in strong. Then we come back down for the third time, again, to about 18,200. And look at how weak the bounce was this time. We only made it back to 20,000. So a $2,000 move compared to, at the start, we were talking, a $7,000 move. We're now making like 30%, a little bit less than 30% of the recovery that we had initially. So again, it's really just showing selling is increasing. People are selling at lower prices, and that is likely to push price down. So this is why a descending triangle is typically a bearish pattern, because it will often break to the downside. It is showing selling pressure increasing, buying pressure is holding, but eventually one of those will win, and more often than not, it tends to be the sellers because they are pushing price down. So the other important thing to consider with any pattern, but for me especially triangles, is what the move that led to it was. So we had a huge move down that led to the formation of this descending triangle. Now there was a slight recovery. It was a bit of a bear flag for me. Personally, I kind of prefer to see my descending triangles form a little bit faster. So say if it had been something like that. But if anything, that makes me even more bearish on this one, because that recovery from that huge move down, was prolonged. It was weak. It took a long time to really get any momentum back to the upside. Now, why the move down is important is it kind of gives you a higher time frame bias. If the move down into this descending triangle, was a downwards move, it kind of shows, okay, on a bigger time frame, the market is moving down overall. So that kind of helps you go, okay, this is a bearish pattern in a market that is moving down overall. That's really got a higher chance of breaking to the downside. Whereas if we instead saw a big move up, in fact, let's do it this way, saves me drawing a triangle. If we instead saw a big move up into this, I'd start to see that as sort of a bull flag, because even though we're seeing the exact same pattern, we have that descending formation, it would be coming after a big move up, which means my high time frame bias would be more bullish than bearish. And so while it's not a perfect bull flag for me, I wouldn't necessarily be expecting it to break to the downside as much as what I would when the move that led to the formation was a big move down. So the last thing to consider with a descending triangle is, where do you take profit? How do you find targets? And there's a few ways you can do that. So for me personally, I'm just a huge fan of horizontals. I just like finding horizontal levels, and I believe that the next one is somewhere around 12,500. So let's just use that. But another way that you can do it is use fibs. You can use the fibs of the move previously, and then you can use an extension like the -27. So that's currently sitting about 14,000. And the third method is one that is known as the flagpole. So what the flagpole does is it measures the move that led to the pattern. So in that case, that's this big move down again. Then what you do with that is you copy the measurement. So personally, I just use a trend line for it. I've seen people use rectangles. I've seen people use all kinds of different things. At the end of the day, it's just measuring a height. You could even use the shift click tool. You then copy that onto the highest point of the pattern, which again was our sort of $24,000, $25,000 top. And then you use the bottom of the flagpole as your target. So in this case, it's about 11,400. You can see it actually lines up quite nicely with our $12,000 level. So that is another method that you can use to set your take profits from a descending triangle. Personally, the flagpole is one that I'm not a huge fan of, but I have absolutely seen people use it to massive, massive success in the past. So there you have it. That is the descending triangle. Hopefully that clues you guys into why they happen and what they mean. Now I'll show you guys how to trade them in VEMA Trader. Okay, so obviously there is essentially an infinite variety of ways to trade anything in the market. That's one of the great things about trading, is everyone finds what works for them. But here are the 4 ways that I would potentially trade a descending triangle. So the very first is just the break of Bravo, right? Looking for a cross. Personally, I would add the candle close condition, but that may not be the way that you trade. But essentially, you're just looking for, okay, this horizontal's been holding for a long time. When that breaks, I want to get in. I want to get into that short. I want to ride that move down. So that is the first way. That would be a short cross set up on the Bravo trigger on the bottom of that descending triangle. The second that I've set up is a break and retest. So if you want a little bit more confirmation, you want to see price break down, come back, retest, and then move away, you can use the break and retest feature to set those conditions. So I've just gone with a 3, a 1, and a 4. The 3 is just to sort of clear these wicks a bit and then come back. Don't want to get front run and reject. Give me confirmation that price is rejecting from that line, confirmation that retest is happening, and then get me into this trade. So the break and retest on the break of Bravo. The third, if you're a very aggressive trader, like I tend to be, is trying to short the top of the descending triangle. So what that would be is setting up a bounce from alpha, sorry. You may use conditions, you may add distance to confirm and things like that. For me personally, I would just look and go, okay, if price gets back to this trend line, I want to get into a short, because every time it's hit this trend line, it's rejected. Get me into that short. I'm predicting that the pattern is going to break down so I can have a massive target. So the short bounce from alpha, from our upper trend line, is the setup that I have there. And finally, we have a counter trend trade. So not every bearish pattern will break to the downside. It's always important to remember that it is a probability game, not a... I was trying to think of a guarantee word that starts with P. There probably is one. It didn't come to me. But it is a probability game, not a perfection game. No, going to force it. So if price was to break to the upside, what we can do is set up a trade to catch that move. If alpha breaks to the upside and we see something like that, we can set up a trade. Now, anytime that I'm counter trend trading, I like to get a lot more confirmation. So where on Bravo, I might just have no confirmation. I could just have the cross, or the first trade that I set up, that cross with the candle close, a little bit of confirmation. If I'm counter trend trading, I really want to be using something like the break and retest, where it's getting a lot of confirmation. I'm seeing, okay, price did break, that's what I thought could happen. Price did retest, and then price has bounced from that retest. It's really showing, okay, buying strength is coming in, getting a lot more confirmation. That makes me a lot more confident in that move when it is a counter trend trade. So a break and retest of that upper alpha trend line is another possible setup. So there you have it, guys. That is how to trade a descending triangle through VEMA Trader. Hopefully you enjoyed this video. Hopefully you learned something about why descending triangles are typically a bearish pattern. If you've got a different way of trading them, let me know in the comments below. Have a great day, happy trading, and I will talk to you very soon.